So I've had many requests to talk about my favorite stocks and the ones that I make money off of week in and week out. And not only that, the ones that help get me from 0 to 100K. Well, today I want to talk about the top 5 stocks for small accounts, but I also am going to tell you guys the top 5 stocks that I trade all the time. Hey guys, Corey here. Welcome to the channel. If it's your first time, be sure to subscribe and tap the bell so you know when I post new videos. And if you're feeling generous, you can give me a thumbs up as it greatly helps the channel. And we have the brand new memberships right below this video, just launched. You can become a member and support Invest with Corey at any time. I've had a lot of requests for different videos, rolling puts and calls, basically rolling options to make money. It's how to make lots of money selling puts and covered calls. I've also had requests for long-term investments and technical fundamental analysis as well as financials. And the video that I'm doing today, my top 5 stocks as well as the top 5 stocks for small accounts. So I figured I would just talk about them both in the same video. So if you have a small portfolio, then you probably aren't trading Apple, Amazon, Nvidia, AMD, Google, stocks like that. In order to get into Apple, AMD, and Google, you really need to have about $16,000 to $20,000, and that's just to hold 100 shares. And then of course you're going to have pretty much your whole portfolio in one position, which isn't good. So realistically speaking, most people that are going to be trading Google, Apple, Amazon, AMD, and stuff like that are going to have portfolios that are at least 30 to 50,000 or more in order to safely get into a couple of those positions. Most likely though, a lot of the people that are trading those stocks are about 100 to 200K or more. So I'm going to name off my top 5 picks for small portfolios, $10,000 or less. We're going to start at number 5 and work our way to the best pick. Number 5, SoundHound. If you have a small account, SoundHound is really good for growing a small portfolio. You can sell puts to get in, calls to get out. You could buy it on the low, sell it on the high, or you can just hold it. And there's been a lot of AI plays that we've missed out on. Nvidia, AMD, Google, Amazon, and there's so many more. Well, SoundHound, priced in the $4 range at this point when I'm making this video, is a great AI play for the coming 2 to 3 years. You can make $5 to $10 a week selling puts or $5 to $10 a week selling covered calls. Or you could make about 15 monthly, whether it's calls or puts. That may not sound like a lot of money. So if you have a small account, let's say of $1,000, you can make about $35 to $40 a month on a SoundHound put. If you're selling 2 of them, that's about $60 a month. So if you're selling 2 SoundHound puts a month on a $1,000 portfolio, you can sell 2 $4 puts or 2 $4.50 puts, which will run you between $800 and $900 collateral. And you can make roughly $50 to $60 for both puts. So your $900 makes you $720 a year. And if SoundHound starts to go up slightly, you can roll out a week or 2 and up to the next strike. So you're going to get assigned somewhere in the first couple of months, almost for sure at some point. And then when you're selling covered calls, you'll just roll out and up to the next strike price. So it's safe to say that you're going to make the $720 on puts and calls, and then you're going to make money if the stock goes up. So you realistically can make 70 to 100% return in a year. That's a lot. Number 4, NIO. NIO is another great stock for a small portfolio. You only need to have around $400 to $500 to start selling puts. So if you're going to sell a $5 put, you would need $500 collateral. This will bring you in another $30 to $35 a month. And once you get assigned, you start selling covered calls and yet again, making about $30 to $40 a month in covered calls. Number 3, SoFi. This stock is a little bit more expensive. You need to have at least $700 to $800 in collateral to start with 100 shares, but you can go ahead and start selling $6 or $6.50 put, and you'll be able to collect a decent amount of premium on SoFi as well. On average, you can make about $30 to $35 a month selling puts and about $20 to $25 a month selling calls on SoFi. This will get you about $350 to $400 a year in put, and with the puts and calls strategy, the wheel strategy that is, you can generate somewhere between $400 and $600 a year, meaning again, you are going to be somewhere between 70 and 100% return, and that doesn't include if the stock price goes up, which you can just roll out and up for calls to collect more juicy premium. The next isn't quite as friendly price-wise, and it's actually more expensive than my number 1 pick, but my number 2 pick is Palantir, another great stock. Depending where Palantir is, you can play it safe. Right now it's at $22.41. So if I was to go out a month, I would sell a $19 put or a $20 put because I want to get into Palantir. In fact, I'm looking at selling puts on Palantir anyway, and that's the price range I was in. So since Palantir is at $22.42 and I want to get into this stock anyway, and I'm sure you would want to get in too, I would probably sell a $20 or a $25 $21 put, probably $21 at this point for more juicy premium. A $21 put, you would need $2,100 collateral, but you would collect about $130 juicy premium per month. Selling covered calls, once you get assigned, going up $1 or $2 on the strike would get you on average. So you're going to get about $100 to $150 a month, depending on where the stock price is and the volatility. That's about $1,800 a year. So again, about 80 to 90% return in a year. And that doesn't include if the stock price goes up and you're able to just roll out and up. Remember, calls can just go out and up for more juicy premium. Palantir is a very good stock to have in your portfolio, and it's good for small portfolios. The next stock I want to talk about is not as expensive as Palantir. However, it's my number one pick. I have a pretty big position in my large brokerage account and a small position in this smaller brokerage account. This is a really good stock, and it's very stable. There's not a lot of volatility, and whether you have a large, medium, or even small portfolio, everybody can invest in this company. And my number one pick for a small portfolio, believe it or not, is American Airlines. And the reason I chose American Airlines is because the airline industry is something that's needed. People have to fly. And Spirit Airlines isn't good at all. They're going bankrupt. JetBlue, even though Carl Icahn put money in them, they're still not profitable. And United is not profitable either. They're not doing too well. The only airlines that's really profitable at this point is Delta, and they're too expensive for a small portfolio. However, American Airlines is projected to be almost $20 a share by next year. And there's a key difference that sets American Airlines apart from United, JetBlue, and Spirit, or even Frontier, and that is cash flow. American Airlines is extremely cash flow positive. So even though they're not profitable this last 2 quarters, remember what I explained in previous videos, just because you're not profitable with net profits doesn't mean you don't have the ability to become profitable. Remember the example I put in another video. I'm going to put it in this video so everybody can hear it again. If you go cut everybody's lawn on your street for $10 and there's 20 people, you made $200. But if everybody on your street needs a month to come up with the money to pay you, you're not cash flow positive because you haven't collected any cash. So the fact that American Airlines is not profitable because their net income is in the negative. However, their cash flow is in the hundreds of millions and it's positive, meaning they're spending their money and going in the negative on profitability to pay off debt and to acquire assets and to expand and invest in their company. American Airlines is a very good stock. There's government interest in it. There's also big institutions and hedge funds that are in American Airlines, which is the reason why I recommend it. This stock doesn't move 10 to 20% a day. In fact, American Airlines only moves about $1 or $2 in any direction in a week or 2 week period, sometimes a month. It is a very stable stock. Even at earnings, it only moves about $1. So if you want to get into a stock where you can make money and not have an extreme amount of volatility, it's American Airlines. It's an option seller's dream. American Airlines is one of the best ways to grow a small portfolio. On average, you can bring in between $50 to $65 a month on American Airlines selling put, and then once you're in, selling calls. This equates to $720 a year, not including if the stock goes up, which means you're pretty much almost doubling your money. You're about a 60% to 80% return yet again. You're most likely going to make more money than that because once you get assigned on a covered call, they take your shares and they pay you the strike price. So you sell puts at $13, you get in. You sell calls at $14, you get out. You're making the premium on the puts and the calls and the $100 in between every single time. It only takes me about a month or two to get in and out of American Airlines. I sell $13 puts, I get in, then I sell $13.50 or 14 calls, and usually it takes about 2 to 3 weeks or a month to get in and the same amount of time to get out. So in a month or two, I'm collecting about $200 premium plus the $100 I'm making. So I'm $250 to $300 profit on $1,300. That's a 25% return every 2 months or more. That is a lot of profit and it's safe. Let's go ahead and take a look at the American Airlines chart. Now, I just want to point out that I'm not a financial advisor and this is not financial advice. I'm just here to give you guys coaching and strategies on technicals, fundamentals, financials, teach you strategies to be more profitable. However, ultimately, it's up to you to decide which stocks you want to get into and how much of your money you'd like to put into those stocks and positions as it's your money. Okay, let's look at American Airlines. You guys can see the price hasn't really changed a lot. $11 to $19 in a year, being this big stretch right here. However, And if we only go back to December, then we're looking between 13 to 16. It's not an extremely volatile stock. So I sold puts back here. The price came up. Puts disintegrated. I kept selling them. I sold a 13. Price came up. I rolled it up to 13.50. Price started coming down. I rolled it to a 13. Got assigned. Sold a 14 call. Got assigned up here and exited. And I collected all that premium and made $100 profit on the stock, on each 100 shares, that is. So I had $5,200 of collateral up before I got assigned in this position and then bought 400 shares. Then I got out with the covered calls. Running the wheel strategy, $5,200 made me over $1,200 in profits. This 1 month period, I basically got a 20% return in 1 month, which is insane. So if you have a smaller portfolio and let's say only had $1,300, so you'd have made like $100, $150 profit in this 1 month. This is a very reliable stock. And I know a lot of people wanted me to do videos on stocks that weren't trendy and weren't trending huge. They wanted to know what I thought of different stocks. I'm going to show you guys the financials, and I'm going to show you guys why, even when I'm running the wheel strategy with 5 to 10 contracts on American Airlines, that I still hold 1,000 shares minimum at all times of American Airlines and just sell covered calls because of how good of a company they are. And I believe I will double or triple my investment in the next 1 to 2 years because of the technicals and the financials on American Airlines. Now we can see the estimate here for the most recent earnings was negative 27 cents estimate, but they actually were negative 34. I wouldn't let that bother me. I don't let that bother me at all because they were 29 cents positive on the EPS, the previous earnings, and they're set to be $1.23 in the upcoming earnings. American Airlines is one of those situations where it's you're either going to get on board now. This is a kind of a situation of the train's leaving the station. Are you on? Are you getting aboard? Or is it leaving without you? If you don't get in now, you could be walking. And you can see the price target is $17.98, basically $18, which signifies a 30% return from where it's at right now. Let me show you why American Airlines is so good on their financials. Total revenue, $12.5 billion. Operating income, $77 million. Pre-tax income, negative $413. So they're losing money, and this is their operating expenses. However, look at their EBITDA, $547 million, down from the previous quarter. However, their total revenue is about the same, which means they're spending money somewhere. We don't know where yet, but they're spending money. Let's look at cash flow, my favorite. Cash from operating activities, $2.18 billion, up almost $3 billion or more from the previous quarter. Free cash flow, $1.36 billion in the positive. The reduction of long-term debt. American Airlines paid down $873 million in debt. That's the reason why they're not profitable. Otherwise, they would be profitable over $300 to $400 million. Now, let's go back and look at investing activities, capital expenditures, fixed assets. This basically means they've either acquired property, locations, physical equipment. This is where capital expenditures will come in. So not only are they expanding and getting property and or equipment and repairing stuff, they're also paying their debt down. So we can't let the fact that they're not profitable scare us off because one, they're cash flow positive on the free cash flow, but they're not profitable, which means they have the cash to be profitable. They have the ability to be profitable, but they're not because instead of them being profitable, they're spending their money to acquire new assets and reduce debt, which means their next earnings call is going to be pretty good. American Airlines is my ultimate play right now for safety because you're not going to just buy American Airlines and then they plummet to $5 overnight. I mean, anything could happen, but American Airlines hasn't been below $10 or $11 in a year. It's been between 12 and 16. So it's a lot safer than most of the stocks we've discussed. It's actually a safer play than Palantir. It's a safer play than Neo. It's a safer play than SoFi, and it's safer than SoundHound. The reality is there's less downside and less upside, technically speaking, because they're not a volatile stock. But I just showed you that they aren't profitable because they're choosing to pay their debt down and expand, get assets and land, and they're cash flow positive. When this date approaches, if they meet or beat this estimate, American Airlines is going to be north of $15 or $16 to stay. As long as they consistently turn out profits, you're probably not going to get American Airlines for under $14 again. Now, in the next month or two, you might, but I'm saying if you don't get in before the next earnings, then you're missing out on the big picture. Let me show you a few stocks that I trade in my large portfolio and my small portfolio, which are a little bit bigger and would require you to have at least $10,000 to $20,000 in order to really trade them. However, if you guys are interested in seeing some larger cap stocks and larger plays, leave your comment below in the comments and let me know if you guys want to see a video on some larger cap stocks that I trade in my big portfolio and even on occasion trade in my smaller portfolio. So for right now, I want to show you some of those stocks. I currently trade Affirm. I have a small position in Affirm, and the reason I love Affirm so much is it's very, very volatile and you can make a lot of premium on the options. I'm making between $100 and $190 a week on Affirm depending on if it's earnings or if there's a catalyst, but I'm consistently making money on Affirm. If you'll see, I rolled for $141 credit to go out 1 week because of earnings. Affirm has very liquid options, a lot of volume, a lot of implied volatility. Vega makes a big difference. Even if I go out $2 to $3 on a non-earnings call, I can still make $30 to $50 a week on one contract. So Affirm is a very quick way to make money. You buy a leap option, or so you get into Affirm selling puts, then you can start selling calls to get out. Big money in that because you can rack up $500 on puts at the end of the month, get into the stock, and then get out making $300-400 profit plus the calls. I mean, in a 2 to 3 month window, you could make $1,000, but it's going to cost you about $3,000 to get in because Affirm's $32. So this position, I have $3,200 in Affirm. It's a little big for some portfolios, but there's a good amount of money. Like if I show you the options, if you sell a put on Affirm going out 1 week, a $31 put's $237, $3,000 collateral. That's a 10% per week return almost. That is really good. Look at the calls. Price is at $32.50. If I go out with a $35 call, which I have, it's $188. Affirm is a very good play for the 2 to 4 month range. You know, if you're going to be doing longer term trading, running the wheel strategy, Affirm, thumbs up, love it. I also have a call on Nike that I'm selling. I also have a call on Nike that I'm selling. I have a small position in Nike, which cost me a little bit over $9,000. I also have a small position in Nike. I have a $92 call I'm selling right now. I know you guys have been asking me to do a rolling video, and I will have that coming up soon, but here's a quick example of that. I sold a $94 call on Nike right here. But then I rolled it down the same week to a $92 call because Nike went down in price and I collected more juicy premium. May 3rd, 94, May 3rd, 92. And I collected $24 juicy premium. And that expires in 2 days from now, which when you guys see the video may be a different date. But from now, it's 2 days and I collected $24 additional juicy premium. So you'll see right here, I sold this call at 95 for $70. Then I rolled it to the following week for 25. Then I rolled it for 24. So in less than 2 weeks, I have made $119. So basically it's $60 a week in covered calls. If you were to sell puts on Nike, I would sell a $90 put because Nike is a very, very good stock to get into, especially with the dividends. $90 put, $114 a week. You could collect $400 juicy premium every single month selling puts on Nike. My next stock that I absolutely love, Ford. I have a very large position in Ford in my other brokerage and a small position over here. Multiple calls in my small brokerage. I got a $12.82 call. You can see up here a $12.50 call, and I have two $13 calls. My other brokerage, I have like 10 call contracts currently being sold. And Ford is really good because again, they're like American Airlines. They're not as volatile. You're not going to wake up in the morning and then Ford just goes from $12 to $8 in a day. It's just not going to happen. Their PE ratio and their forward-looking PE ratio is 25, which is stellar. 20 to 25 is stellar. Ford, the chances of them going below 12, highly unlikely. Even with the massive recall 3 weeks ago, they're still back up to $12.30. They were at $13 just a week ago. Ford, bravo. Very good play. The only thing I don't like about Ford is their options. They're not that good. You're only going to make about $6 to $10 a week selling puts or calls, but you're going to make up for it with their very, very good dividends, because their dividend yield is fairly good. So every 100 shares, you're going to be collecting between $18 to $25. And Ford also pays out a double dividend bonus once in a while. So sometimes you'll just get a double bonus, which I got, a few months back in January. I have like 10 contracts on Ford on my big brokerage, and I've got like 3 in this one. So I'm collecting 13. Sometimes I have more, but on average, 13 to 15 dividends every 3 months. The last one was $18 times 2 because I collected a special. So $36 times 15 contracts. I'm collecting 500 sometimes, even without the special they did, about $20 times 13. On average, I've been collecting, between 3 and 500 every 3 months just in Ford's dividend. Very good stock. Another stock that I have a small position in on this account, 100 shares, which if you want to get into is going to cost you $3,000 or $4,000, is Roblox. I have a small position in Roblox. Very good stock, pretty volatile, but for the long term, very good options volatility, which is what you want as an options seller. Look at the implied volatility, 112%. Let's look at Vega. Every percent change is going to give me $2 extra. I sold this covered call, $82 for 1 week on $3,000. I don't have to sit around stressing. Like, I'm not buying options and worrying about them. I'll just roll out and up. If it goes up in price, I'll roll out and I'll roll up. Watch. What happens if Roblox goes to, let's say Roblox goes to $39. $39.55. On expiration, I make $100, but I'm still out the other 58. Okay, not a big deal. There's no stress. Selling covered calls is the safest strategy you can run in a portfolio. You don't roll your options until theta decays it out. Let me explain what that means. My current option is for May 10th. If we open it up, you'll see that theta is 14.21, which is $14.21 per day. Here's the decimal point because it's controlling 100 shares. So $14.21 a day, this contract decays. So we saw the theta was $14.21 in the original option that I currently have. The theta on this option is $5. Get my calculator out. $14.21 per day minus $5. So for every day between now and May 10th, the short covered call on Roblox that I have for $39, that covered call is going to lose $9.21 more premium than the one that I intend to roll out to if the stock price goes up. So we're going to times the $9.21 by 9 more days, which means it's going to decay by 82 additional dollars, almost 83. So if I select this $40 call, it's going to show you I'm only getting a $20 credit. However, we got to add the $83. So I'm really, if the stock price goes up to $39 and hits my target price on the call, then I can roll out from 39 to 40 and collect another $100 for 3 more weeks, which is still $30 a week additional juicy premium. Roblox is another really good stock. I also have a put on Upstart. Another position you need at least $2,000 or $2,300 to get into. But I'm selling a put on Upstart, and as soon as I get assigned, I'm going to start selling covered calls until I get assigned and get back out of the stock running the wheel strategy. The last stock I want to go over is Lyft. I have a very small position in Lyft right now, and I'm selling 4 calls. I have 2 calls for 16, and I have 2 for 18 because the earnings are coming up. So again, this is a stock that's about $1,600. So in order to have 4 positions like I do, you would need to have about $6,500 to get into this. So this is another stock that's very good. The previous earnings was great. Lyft's target price and fair value is $19. So it's going to be going up. Right now, there's really nothing but upside as long as they meet or beat this earnings. The options are pretty good. These 2 $16 contracts that I currently hold, I collected $70 juicy premium for 4 days. Now, if the stock was to go up, I could always roll this position out. I could go out to May 10th, which is next week's for earnings, and I could roll up to $18, which we can see the theta is $7 a day. The current theta on my current options is 11. So 11 versus 7, $4 times 3 more days left on these contracts is $12 more. So I could click on this. I will get a $78 credit plus about $12 more. So about $90 credit. So I will make another $80 to $90 juicy premium for one more week. Lyft is a very good stock to run the wheel. American Airlines, Lyft, Robinhood, Roblox, Affirm, Nike. I really love Nike, and Ford. These are stocks that are really stable, with the exception of Affirm. However, it always rebounds, especially on earnings. So as long as you're playing the 3 to 6 month game with Affirm, can't go wrong. In fact, even if the stock goes down and you lose $300-400 on the stock, you'll make that back in 1 month's covered calls. You're offsetting your losses. All these stocks I just talked about, Affirm, Roblox, Nike, American Airlines, Ford, Lyft, Robinhood, Hims is another good one. These are all very good stocks for smaller portfolios. Not small, smaller. As long as you have 10 to 20,000 in your portfolio, you can play around with these stocks all day long. And they're really good. These stocks I just went over are very good stocks, and they're safe. Guys, I could sit here and ramble all day on these stocks because I truly love trading, investing. This is my dream, and I love it. Unfortunately, this video is going to be too long. So if you want to see more of these type of videos, please let me know in the comments, please, because this way I know you like them, because I literally can sit here going over every stock on the stock market that I trade and that I love, or ones that I haven't traded but want to trade and want to discuss with you guys. So if you want to see more videos on all of these stocks I just mentioned and more stocks, and you just love listening to me discuss these strategies and want to see more of it, let me know in the comments below, because I love, and I really mean that, I love doing this. I mean, I could sit here and talk about these stocks for hours, but unfortunately these videos can't really be that long. I got to keep them to 10 to 20 minutes. So if you're enjoying it, let me know in the comments, and I will make more videos on Robinhood, Lyft, Affirm, Roblox, Nike, General Motors. Like, I'll talk about any stock you guys want, especially if I have experience with them. So let's go ahead and look more at American Airlines, since that was the big pick of my top 5 right now in this video. I highly recommend selling weekly to bi-weekly, and that's just my honest opinion. Really, I think weekly to bi-weekly is the best in American Airlines. Here's May 10th, 9 days out. Click sell put. We're going to sell $13.50 put. Very aggressive. Don't care. I want to get into American Airlines. In fact, when the market opens, I'm going to place this trade. I already have a lot in my other portfolio, and I have the wheel in my other portfolio, and I have a small position in this portfolio. So I really have me a lot of American Airlines, but I love this stock. But you click on sell put. Don't care that the stock is $13.62. Don't care. It's very aggressive, very close, but it's safe. Worst case, I buy the stock. American Airlines is a bargain at $13.50. It's even more of a bargain at $13. So click it. One contract, 26 to 28. I'll just put in 27. I'll just collect me $27 juicy premium. If I'm going to sell 3, I might sell 3. Collect $80. Where are you going to get $80 for a $3,600 collateral? In worst case, you just buy the stock. Let's just say you get assigned in 2 weeks. So we're going to go ahead and add up 27 times 2. Okay, $1,354. Then you have to pay $1,350 for the stock. So now you basically are averaging $12.96 for the stock. So $12.96. Now let's go ahead and sell a covered call. We're going to go week out. We're going to sell $14 call. It's going to get us a $15, maybe a $16 credit. We'll do that 4 weeks. Let's say we get assigned 4 weeks out. That's $48. Take away 48, then we get assigned, and we get paid $14 for the stock. $1,400 for 100 shares. We've made $152 in 4 to 6 weeks on a $1,300 investment, or $1,350 investment. That is about 11% return. Like, what is that? Yeah, about 11 or 12% return in 4 to 6 weeks. That is insane. This isn't a casino play. If you're looking to get 50 to 100% plays, I have them sometimes, and I'll share them with you, and I'll teach you how to get them. In fact, I have 1,000% or even a 2,000% return strategy that sometimes pops up. But generally speaking, 10% a month is very safe, very consistent, and you can do it all the time like this. Run the wheel strategy. Once I get assigned and I sell American Airlines for $14, guess what I'm doing? I'm going to go ahead and start selling $14 or $13.50 puts again. Now, since American Airlines isn't at $14 right now, it's at $13.65, selling a $13 put would be the same thing as selling a $13.50 put when the price would be at $14. Hypothetically, if I had just got assigned and sold my shares for $14, I would sell a $13.50 put, which would be the same thing as selling a $13 put right now. $10, I get about 11. So again, I'd start collecting $11 a week. Next week, if the price goes down, I would collect more like $15 to $20. Juicy, juicy premium. And I just keep doing this. Sell the puts, get in, sell the calls to get out till I get assigned and I get out, then start selling the puts to get back in. American Airlines is a very wonderful and safe stock for a small portfolio and is my number one pick for safe passive income on a small portfolio. Guys, I really wish there was more time for me to do more content in this video, but we're going to be going through all the stocks and it's going to be a 30 to 40 minute video and I can't have that. So I'm really hoping you guys enjoyed it. My top 5 picks, to go over them one more time: number 5, SoundHound; number 4, Neo; number 3, SoFi; number 2, Palantir; and number 1, American Airlines. If you want the safest and most passive income with the least amount of risk, but also want juicy premium, it's really a toss-up between Palantir and American Airlines, because Neo, SoFi, and SoundHound don't really have a lot of premium in the options. They're good for small accounts with $500. However, if you have $2,000 in your account, Palantir and American Airlines are the better bet. Now, American Airlines doesn't have as good of a premium as Palantir, but it's half the price and it's a little bit more safe. So realistically, you could do Palantir or you could do American Airlines. But if you want my honest opinion on which stock I recommend for a portfolio of $5,000 or less, let's say $3,000, $2,000, even $1,500, I highly recommend American Airlines as the first stock that you start trading. If you don't have $1,500, and obviously you can't, however, if you have at least $1,500 of buying power available, sell puts to get in and sell calls to get out, because American Airlines is pretty steady and consolidating, but when it does come down, you'll get assigned, and believe me, it will. And then when it goes back up, you will get assigned, and believe me, it will. It'll dip between 13 and 15 about every month or two. So if you constantly are selling puts, then once you're assigned, sell calls, and then once you're assigned, go back to selling puts, you can make ridiculous money on American Airlines. Thanks so much for being here, guys. I really appreciate you. Be sure to subscribe and tap the bell if it's your first time and you enjoy the content. And if you love the videos and you're enjoying them and you're feeling generous, give me a thumbs up, as it greatly helps the channel grow. And not only that, finally, you guys can join the membership right below this video to become an exclusive member of Invest with Corey right here and support the channel on YouTube. We'll see you guys very soon on the next video. And remember, until then, let's grow our wealth together. Take care, guys.